Let's take a look at the global market highlights and news for March 27, 2014. Markets worry about Zuckerberg's buying spree. U.S. durable goods better than expected, and oil breaks $100 on lower inventory. Let's see what's happening in the global markets now. Europe's stock markets advanced strongly for a second day running as investors focused on upbeat economic data and set aside Ukraine-Russia worries. Frankfurt's DAX 30 rallied to 9448.58 points, boosted by data showing German consumer confidence at a 7-year high in March. In Paris, the CAC 40 index jumped to 4385.15 points. However, London's benchmark FTSE 100 index was broadly flat, carving out just a 1-point gain, ending the trading session at 6605.30 points. Wall Street ended the day down more than 0.5% weaker after turning lower in afternoon trade, despite a report that showed U.S. durable goods orders climbed higher than expected in February. Markets had started the day about 0.5% higher, but dived after U.S. President Obama warned that the crisis in Ukraine was far from over. At the close, the Dow Jones Industrial Average fell 98.89 points to 16,268.99. The broad-based S&P 500 lost 13.06 points to 1852.56, while the tech-heavy Nasdaq Composite Index gave up 60.69 points to 4173.58. Facebook came under pressure after the company announced a $2 billion acquisition of virtual reality firm Oculus VR late Tuesday. Oculus makes a headset for immersive gaming that Facebook plans to develop into a communications and education platform. But an early rally to Facebook shares faded later in the day and the stock closed down nearly 7%. The acquisition comes about a month after Facebook bought messaging app WhatsApp for $19 billion. Comments by some big investors suggest that CEO Mark Zuckerberg is spending too much money. In the foreign exchange market, U.S. durable goods orders jumped 2.2% in February from the prior month to their highest level since November. The number was better than the 0.8% rise expected by analysts, but enthusiasm was dampened as the gains were driven almost entirely by airline orders. The euro held steady near recent lows versus the dollar on Thursday after comments from European Central Bank officials revived speculations about further monetary easing. The euro traded at around 1.3784. The euro last fetched 140.40 yen, down 0.2% from late U.S. trade on Wednesday. The yen touched a one-week high of 101.71 against the dollar earlier on Thursday, drawing some support from renewed concerns over Ukraine after President Obama's tough talk on Russia on Wednesday, as well as some soft spots in U.S. durable goods orders data. The Australian dollar stayed firm near a 4-month high on hopes of economic stimulus in China and upbeat comments on the economy from Reserve Bank of Australia Governor Glenn Stevens on Wednesday. The Aussie edged up 0.1% to 0.9237. In the commodity space, gold dropped to its lowest close in nearly 6 weeks as signs of economic recovery in the U.S. raised bets the Federal Reserve will further parse stimulus, curbing demand for the precious metal as a store of value. Gold surrendered 0.6% to close at $1303.40. In energy, oil settled above the $100 level for the first time in about 2 weeks as inventories in Oklahoma decreased for an 8th week and demand for gasoline increased to a 3-month high. Stocks at the WTI delivery point slid 1.33 million barrels in the week ended March 21st, the Energy Information Administration had reported. This is Amy Anderson from Option Rally signing off, and of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great day.